Very torturous Monday morning. Let's take a look what's happening. Here is long on S&P, respecting decision point 2, very powerful Fibonacci target. Decision point 2 on S&P to the upside has exact same meaning as decision point 2 on S&P to the downside. Pay attention what S&P is doing at decision point 2. Do you know what Fibonacci targets are? To the upside, 1835 and a quarter, crucial level that S&P is struggling immensely. And this is exact same level to the downside. Very important 1800 number. All the levels spelled out on monthly since 2009. 1800. Will it be reached today? Will it be reached again this month? Very soon. This is what happened to the upside on S&P. Decision point 2. Exact same formula as decision point 2 to the downside. This is the end of the bearish correction on monthly. Respected August 2015. Respected end of January 2016. Respected October 2014. Once 1800 is out, S&P is heading to 1600. And this is exact same formula as you're witnessing on day trading chart, except to the upside this morning. What in the world is wrong with me? Why are we long? Simple. Bearish collapse had started an overnight session from reversal zone 1882. Bearish collapse at exhaustion levels, dancing in very dangerous bullish corrections the entire morning. If you're shorting this late 40 points later, you're in for a surprise. You think you're riding spectacular collapse, but ouch, why in the world are buyers coming? Buyers remain extremely weak and sellers remain exhausted. But don't be surprised if buyers will pick up the steam. We are dealing with very powerful support levels. But nevertheless, to the upside. Buyers struggling to break through decision point 2. If you manage to score 2 points today, and if you understand decision point 2 and how much S&P respects this level, you understand the importance of this level when it comes to any item and any time frame. Decision point 2 is currently extremely important on gold. Gold is doing exact same thing as S&P right now on hourly. Bullish entry on gold on daily chart November 2015 posted on social media everywhere. To the upside 1300 will be decision point 2. Exact same relevance as decision point 2 on this chart. You're witnessing what's happening here. And that's the power and magic of Fibonacci in price. No indicator on the planet will ever tell you or show you where price heading to far in advance. All the levels on gold spelled out by the price since 2009, playing out today in 2016. The most spectacular formations in the market. This is the slowest Monday morning in weeks. Here we go. Will S&P revisit decision point 2 and will this time around blast through and fly to reversal zone as I continue warning you. Buyers picking up the steam. But one step at a time. And that's the magic of the price and Fibonacci, confirming and showing to you time and time again. Price is perfect puzzle. All you have to do, play by the rules. 1835 and a quarter is next again. Trail 1831 and a quarter. You're witnessing this time around how crucial and powerful this level is. And here we go. Price reminded you how essential it is to respect Fibonacci target. Price reminded you how speculation never works, that knowledge is power, and there is nothing possible without Fibonacci levels. Price reminded you that S&P adores decision point 2, as it's showing to you very clearly on monthly, as it's showing to you very clearly on yearly, as it's showing to you very clearly on multiple instruments. If you respect Fibonacci levels, you can trade any instrument. What is the difference? Psychology and risk management. This is reversal zone S&P yearly. This was reversal zone on gold monthly. If you remember and understand what 1900 was on gold and where gold reversing from, you understand what 2100 had been on S&P, as posted for years. When S&P will come to 2100, get out of the markets. Do not be motivated by greed and ego. Do not be speculator or CNBC soap opera watcher. Be knowledgeable Fibonacci trader. Whatever formula you apply to your investments, it doesn't matter if you trade the Ralph Lauren monthly, that at the end of the minor trend, 80 is broken, Ralph Lauren heading to, oopsie doopsie doo, 42. And that's the power of Fibonacci, as S&P reminded you this morning. Each and every time. Play by the rules and remember, no trend goes on forever. And if you know Fibonacci levels, and if you know alpha wave trader rules, all you have to identify what's appropriate for you and your instrument and your time frame. As you could witness time and time again, what graduates trade. We start from scratch this afternoon in class. I will be trading with students in the room, in education room, into the market close. And if you listen to Complete Beginner Trader, who just continued sending me emails this morning, how well he's doing this morning, this is what it's all that matters. Complete Beginner Trader can accomplish this much in such short time frame. What is stopping you? Gian never pushed a button on his platform until October last year. So, we start from scratch this afternoon at 2 p.m. S&P remains incomplete, bearish and bullish correction at crucial exhaustion levels. All I can do is respect what price is telling me. On hourly chart, you are shorting S&P, where collapse had started in European session 1882.50. This is this morning, and this is very, very dangerous dance. Price is dancing back and forth, back and forth, back and forth. In order for us to short, we need to be outside of reversal zone, as we know that buyers here are stepping in endlessly. And that's the power of the price, and that's the power of knowledge. I learned extremely clearly in 2008 that Fibonacci are worthless. I learned that Fibonacci is all that matters. I learned in 2008 why Chesapeake is filing for bankruptcy today. Poor Chesapeake Energy, the company I adored in 2008, and learned extremely clearly that the only thing that matters is Fibonacci. As Fibonacci spelled out in 2009, that this rally will end when S&P will reach 2100. And if you understand what price is telling you, you would understand the accuracy of the method, as posted on social media time and time and time again. That oil would head to 30, that Apple would reverse from 130, that Valiant heading to 0 along with Men's Warehouse, that Amazon is collapsing, all recorded forever. That Chipotle is fried, Twitter heading to 4, all documented on social media, all spelled out far in advance, by price and Fibonacci only. Shanghai Index, reminder of the importance of reversal zone. 5100 on Shanghai Index is exactly the same as 2100 on S&P. Looks familiar? Where S&P is right now on yearly? So, S&P 1800 is broken, heading to 1600. As projected for a long time, Shanghai Index is heading to 2000. 2000 on Shanghai Index has exact same relevance as 1600 on S&P. That's where Shanghai Index is heading to. And no matter how Chinese government will try to save the collapse, they will not be able to. No one can stop this collapse. It's been spelled out by the price since years ago. And if 2000 broken on Shanghai Index, ouch. it's heading to 1100. 1100 is broken. Ouch, it's heading to negative. That would take a while. If Trump is a president, it might. So, that's China for you, traders. Just respect and remember where S&P is. Respect and remember what happened on gold. And remember, nothing is possible in investment, nothing is possible in trading, unless you play by the rules and unless you respect and know Fibonacci levels. I do not use standard Fibonacci levels. I developed my own levels. I developed my own rules. If you just speculatively using random Fibonacci levels, nothing will ever work. 8 years later, price could not be more pure and more clear. It's that simple. Price for entry and Fibonacci for exits. And if you learn that, you decide. Do you use your knowledge in investing in gold, trading VIX, or S&P? Buyers picking up these team traders.